The Checkpoints is presented by pharmaceutical company GM Pharma. In February 2025, Georgia's export decreased by 7% year-on-year, totaling $431.5 million. For the January period, total exports amounted to $835 million, reflecting a 4% annual increase driven by an 18% growth in January. As for imports, their volume in February stood at $1.1 billion, also marking a 7% year-on-year decline. However, total imports for January-February reached $2.7 billion at 19.5% increase, though over $500 million of this was attributed to the import of expensive paintings and sculptures. Without this, the real import volume was $2.2 billion. Further details on which goods imports and exports declined in February 2025 will be available on March 19th when Geostat publishes a detailed foreign trade report. The National Bank of Georgia kept the refinancing rate unchanged at 8% and expects inflation to rise in the second half of 2025. The central bank predicts that inflation in Georgia will temporarily exceed the target level of 3% in the second half of the year, but will remain around the 3% target for the year overall. The National Bank also noted that preliminary estimates of economic growth for January 2025 indicate an 11% increase, pointing to higher than expected economic activity. However, the bank anticipates that uncertainty in Georgia's economy will remain high overall. The Ministry of Finance published a report on Georgia's state debt as of February 2025. According to the document, the total debt amounted to $8.5 billion, an increase of $30 million compared to January. Year-on-year, January state debt decreased by $173 million compared to February 2024. Also, this reduction was primarily due to exchange rate effects. Foreign direct investment in Georgia totaled $1.3 billion in 2024, a 30% decrease from the revised 2023 figures. According to preliminary data published by Geostat, the main reason for this decline was a reduction in two key FDI components, equity capital and reinvestment. By sector, the highest FDI inflow was in the financial sector, $526 million, though this was $60 million less than the previous year. The manufacturing sector ranked second with $170 million, reflecting $130 million decline. The real estate sector was third with $155 million, showing $44 million increase. For individuals refinancing loans up to 200 million Georgian lari and transferring them from one bank to another, the maximum prepayment fee imposed by banks has been reduced from 2% to 0.5%. According to National Bank President Natia Turnava, lowering prepayment fees is an important step in protecting consumer rights. Georgia's Revenue Service has imposed a tax lien on Georgian Manganese, the country's largest mining company. A written response from the company indicates that the amount in question is in the tens of millions of Georgian lari, which Georgian Manganese owes to the state budget. According to a study published by the European Business Association, political instability is the biggest challenge for businesses in Georgia. Out of nearly 200 European companies questioned, 77% cited political instability as the main barrier to business operations. The second most significant issue was a shortage of skilled labor, with 66% of business highlighting as the key challenge. The third major issue was the inefficiency of the judicial system, identified by 58% of the respondents. The Checkpoints is presented by pharmaceutical company GM Pharma.